Okay. Welcome back, everyone. Just a quick sound check, and then we'll get started. Audio should be good. Okay. So, welcome back, everyone, to tonight's webinar, this week's webinar. So this is going to be a Q&A session as well as a live Outlook session. Just a quick general advice and risk warning disclaimer that note that any advice given here is deemed to be of general nature, as the information or advice given does not take into account your particular objectives, financial situation, or needs. Therefore, at all times, you should consider the appropriateness of the advice before you act further. CFDs and Forex are leveraged products and thus carry a high level of risk and are not suitable for everyone. You can lose more than your initial deposit, so you should ensure CFD and Forex trading meets your investment objectives. Strategies, and charts used in this presentation are, for example, only. You are reminded that past performance is not indicative of future performance. Okay. A couple of notes to go here. I think we need to take a look at what the market has been feeling. So the data that came out from the US, especially the housing data, the new home sales data, I believe, that was low, a lot lower than expected. I believe it went down by 16.6% month on month, and also the manufacturing numbers. That was a little bit on the lower side as well. Not just in the US, I believe in the UK as well. A significant drop in the UK in terms of services PMI. Manufacturing PMI not as much in the UK, but composite PMI was down a lot. So there's a lot of concern here now with the PMI data. We don't normally talk about PMI data, but I think this week it's going to be there's going to be a lot of focus on the PMI data. One thing to note is this. PMI is measured by 0, 50, 100, right? The closer it is to 100, obviously there's a lot of expansion going on in the economy. The closer it gets to 50, that's when it starts to go stale. Now, if it drops below 50, then we're talking about an economy that is actually slowing down a lot. So it is actually slowing down. We are looking at the PMI number dropping down closer to 50. So a lot of talks in the market right now is that there's a potential for recession on a global scale. Started with the US and stuff like that, which that's going to be in contrast with what the central banks are doing, with the FOMC being hawkish and the RBNZ being that was a surprise in the market. Hike by 50 basis points. That's expected, but they did announce that they're likely to be hiking more throughout the year. A lot of the consensus was for the RBNZ to do the hike today and then announce that they are slowing down. That's not to be the case. So we are considering the RBNZ to be more of a super hawkish stance at this point in time. Now, with the interest rate likely to go up globally, and then with the manufacturing numbers dropping down, housing numbers dropping down, housing numbers and interest rate, that's kind of relatable. If interest rate goes up, starts to go up, then, people are more reluctant to purchase new houses and stuff like that. But I think the number that worries the market was that it was 16.6%, a decrease of 16.6% month on month. So that's where you see the US dollar weakens from Monday with the data yesterday as well. But what we're going to take a look at tonight, it's actually going to be slightly different. We are going to focus more on the yens. We are also going to take a look at the US dollar. The US market just kicked off. So let's see what we are going to find on the market today. But likely we're looking at dollar strength to return intraday. We're looking at signs on pound USD, Aussie USD, with the exception of euro. Euro is actually strengthening against the majors, and we'll take a look at the Euro crosses today, like the Euro AUD, Euro CAD, Euro Pound, I think with the exception of Euro Yen. Okay, so I'm going to start off with the Aussie Yen, and then we're going to take a look at the Euro Yens, the Sterling Yens, but if you do have any requests, do type it in and then we'll take a look at that. But with the Aussie Yen, right now, we did pick up the bearish butterfly last week. In the case of the Aussie Yen intraday wise, we are looking at support right now around 89.50. I don't think the hourly close was below 89.50. So intraday traders might want to watch out for this hour here. If it closes below 89.50 on the hourly time frame, then we could potentially see further push lower on the Aussie Yen. Okay, just give me 1 second. Okay, so with the Aussie Yen, 89.50 is going to be the focus. The candle is actually progressing lower to below 89.50, but we don't have confirmed close below 89.50. So if we do have confirmed close below 89.50, then we are likely going to track lower. When we talk about lower on the Aussie Yen, we are going to be looking at 89, and then that's going to be followed by 88.50. Ultimately, we are expecting support to come in at around 88. So 89.50 is going to be the main focus for now. I'm going to switch to the pivot points. Right, pivot points is showing support around 89.25. So I think, yeah, this is the first support level, as this is S1. The S2 is actually located at 88.40. So that's kind of in line with the support we're looking at for the Aussie Yen, around 88.50 range-ish for the Aussie Yen. We do have enough momentum for this one to progress lower, and this is the same scenario that you're likely going to find on the Sterling Yen as well. But we'll take a look at that in a minute. So for now, Aussie Yen, it's likely to track lower. In terms of intraday support, we do have around 89.25, and that's pretty much it. Below 89.25, it just jumps down to around 88.60. So if you are planning for a trade on the Aussie Yen, I think this could be a potential swing trade. I know some of you are probably in that swing trade already, but just in case with this one, make sure your stop losses are above the pivot level, which is around 90. Okay, just place it around 90.50. In terms of targets to the downside, we are going to be looking at around 88.50. That's going to give you about 1-to-1 risk reward ratio. Obviously, this can be adjusted once price progress below 89.50. But until that happens, this is the likely range for the Aussie Yen in terms of intraday movement. Okay. Is it just me, or I feel like market just move up and down this month? Well, the way I look at it is this. A lot of volatility in the market, and that's why I put the Aussie USD in the outlook today. That one is suitable for intraday traders because we kind of have a barrier that we picked up on the Aussie USD. So I actually put a note on this one on Monday. But don't get too surprised if we saw the US dollar weakening and stuff like that. Today, it could be a different scenario. I'm going to talk about the yen crosses first because this one is, I know some of you are probably trading the yen crosses, the yen pairs. So this one has a lot of volatility in terms of range. We are actually looking at about 100 up, 100 down for the Aussie Yen. Next up is the Sterling Yen. Okay. Sterling Yen, we are actually still hovering around pivot. Pivot, it's actually at around 159 for the Sterling Yen. We have a lot of momentum to go to the downside. In terms of the hourly close, this one, you can actually kind of wait out for the Sterling Yen. Support is actually at 158.50. So if there is a confirmed hourly close below 158.50, that's where we are, looking at a potential short for the Sterling Yen. And there's a lot of momentum left to go here in terms of the difference between the stochastics. One is at 21, the other one is at 48. So we are looking at close to about 30 in terms of points and the stochastics in terms of gaps. The fast stochastic is actually dropping down a lot faster. That gives you an indication that short-term trend i.e. if we're looking at it from the an hourly perspective, that would be where the market's likely going to go in terms of today. 15850, it's your barrier, that's your support there. We lose 15850, that opens up a lot. Now we're talking about 100 pips to the downside. We're looking at around 157.50 for the sterling yen. So sterling yen, I don't think we should be looking at for a potential long here, because right now in terms of the hourly time frame, let's refresh the fib that we talked about last week. So I'm going to hide the Ichimoku cloud and the pivot points. Now, if you are wondering where to look at the fibs and stuff like that, what's this rejection at 159.50, then I'm gonna label this as A. Okay, so A is up there, and this low here, it's going to be B. Okay, now this is where we want to draw our fib from A to B, and pay close attention to the rejection around 159.50. I'm just going to highlight this here before I draw the fibs. There's a daily fib that I need to clear off so we don't get confused. But okay, so look at A, B, and around 159.50. What are we likely to find? If I look at the pattern as it is, then we are probably looking at about 50% potentially, or at least 38.2%. But let's just draw the fib. That's exactly at 50%. So we do have a rejection that happens at 50%, and this is where we are going to label our C. Okay, because right now this is tracking lower. So we actually have A, B, and C is at 50%. I'm going to draw a new fib that's going to create an extension, and the 158.50 is actually just slightly below 61.8, between 61.8 and 78.6%. Therefore, if we are looking at further push on this one, pay close attention to where the pivot point that I'm going to bring back is going to be located, and also consider where the 127.2% is located. It's at 157.50, which is a psychological price level. So I'm going to bring back the pivot, and you can kind of estimate where point D is likely going to be. So if you take a look at this one, then point D is likely at support 1 on the pivot, around 127.2. That's what we are aiming for if there's an hourly close below 158.50. Therefore, stop loss, unfortunately, is still going to be at above 159.50, but we can kind of estimate where point D is going to be. In terms of risk reward ratio, it's not going to be that great, but we are also not going to leave this one alone. But it depends on your situation. Some of you probably got in early, maybe from the drop A to B, and then you guys have a short position. If you're looking for a new position, then unfortunately you need to wait for a close below 158.50. And in terms of risk to reward ratio, for new traders looking for a new position, then your risk to reward ratio is not going to be 1-to-1. You're actually going to be risking a bit more. We are looking at 124 in terms of risk for a potential gain of around 90 pips. Is this within your risk profile or not? It really depends. But the other alternative scenario is actually wait for a potential move towards 159, but that would put this at risk, because if market move back above 159, then it could actually create a reversal to the upside. Then we actually have a new godly patterns to watch out for. So be on the lookout for this one here. If you do have a short position, then you can adjust it accordingly. Stop losses could be moved from A to C. If you're planning for a new position, then yeah, this is the risk you need to consider. You are going to be risking around 125 for a potential 90 pips potential gain. Okay, so that's for the sterling yen. Okay, so normally I would just say, yeah, I'll wait for market to pull back to 159, then jump in short. But if market does push back to 159, it potentially put this at risk at this point in time. The reason why I'm not going to go for a buy is that this is below the Ichimoku cloud. Okay, this is below the Ichimoku cloud. In terms of correction to the upside, it could pull back up to 159, 159.50. But again, as I mentioned, it could cause a potential swing in the momentum. So just be on the lookout for this one here. My main focus is not going to be on the yen today, tonight. But I need to bring your attention to yen crosses because the range are pretty huge. So some of you might have jumped into Aussie yen, Euro yen, sterling yen, Canadian yen, dollar yen, whatever yen, right? So this is the risk that you need to consider. The volatility is likely going to pick up. It's just the range is just going to get wider. And if we take a look just from the pivot itself, it's huge. I mean, we are looking at a gap of from resistance 1 to support 1. We're looking at around 300 pip range. So therefore, between pivot to support 1 or resistance 1, it's around 150 pips, and that is it's actually kind of the daily potential range for the market here. Okay. Right, we got Aussie yen, we got sterling yen. Next up, it's actually Euro yen. This one here, it's slightly different. Notice this one has actually moved down below the support one at around 135.50. I highlighted 135 there as a potential support. And if you take a look at where the support 2 is located, this is S2, by the way, if you're wondering what these are pivots. This is your support 2. The first one is obviously support 1. We're likely not going to go to support 3. Now, if something moves beyond support 1, then it's likely to lose momentum. So the Euro Yen, we have seen that movement happen. In terms of range, it's actually a smaller range. Now we talk about Sterling Yen just now. Sterling Yen has a range of 150 pips from pivot to support 1 or resistance 1. In terms of the Euro Yen, it's actually less than that. The range is actually just around 62 pips from pivot to support. So we actually have a smaller range on the Euro Yen. That's why this one has actually gone beyond support 1 on the Euro Yen. Now, unlike the Aussie Yen and the Sterling Yen, I do consider this to be a little bit risky if you do plan a short on the Euro Yen. Let me just clear this off, right? And let's take a look at where the Ichimoku is. We just transitioned. Unlike the Sterling Yen was it actually transitioned below the Ichimoku cloud a couple of days ago, but this one has just transitioned today, just in the past 4 or 5 hours. So this is actually still fresh, right? Let me bring up Sterling Yen and give you a comparison. This is Sterling Yen. It crossed over yesterday. The Euro Yen just crossed over today, just a couple of hours ago. Okay, now in terms of this one, or what are we looking at here? We are actually looking. Let me just hide this and show you the bigger picture. We don't have anything here. It's pretty empty, yeah. But if I zoom out, you can kind of see where the market is taking this up. Okay, it's actually picking up a little bit. So, Euro Yen, when I bring up the other Euro crosses, then you are likely going to see that you'll start noticing it, that the Euro is actually gaining against the other major currencies. Part of that is because of ECB likely going to move to neutral from negative rate, so they are likely going to hike rates. It's just that what's in the market right now, euro being very speculative and all, people just started speculating that the interest rate is just going to be, a lot of interest rate hikes that's going to happen. I think the ECB is not going to do that, but in any case, sentiment in the markets that they are looking for a stronger euro. Let me just bring this the Ichimoku back up so you guys can see that. Okay, so in terms of ABCD extension and whatnot, we are actually still within this cycle here, I believe. Let me just go into the 4 hourly time frame, just pick it up, but just in case, this is the current cycle that we have. Market just corrected to 61.8. We are looking at support clusters coming in at 135. So let me just redraw 135. And the reason why I have 135 is that I want you to focus on this one over here. I'm going to get rid of the Ichimoku. Right? 135. There's going to be stronger spots coming in. So if you're planning to navigate the Euro Yen, I would say wait for a potential bounce off 135. So if you're short Euro Yen, just be very careful around 135 because price could actually do this and then just bounces off. Okay. Therefore, unlike the Aussie Yen and the Sterling Yen, I actually prefer to wait for a potential buy to happen. Maybe hopefully we'll get a stop loss around 134.50, but in terms of target, we could be looking at about around 136, 136.50. But yeah, it's gonna give me a much better risk reward ratio than just going short the Euro Yen. Okay. Let me bring up the Euro AUD, Euro CAD, and everything else, and you guys will start noticing that the Euro is actually gaining. The Aussie, for example, the Aussie USD, it's dropping off. All right, this is the Aussie USD. And let me bring up the Euro AUD. Okay, if Euro AUD goes up, Euro is actually stronger than the other majors. If you take a look at the Euro USD and just the Euro USD, you can actually start to pick it off as well. But I'm going to show you cross currencies tonight. Euro AUD, it's picking up. Euro Canadian, it's starting to pick up. Take a look at the momentum here. It's actually turning around. These are exotics, by the way. If you're new or if you're not used to trading Euro CAD, Euro AUD and stuff like that, just be cautious with this one. Okay, but if you take a look at the stochastics on the Euro CAD, Euro AUD, it's actually going the other way, which is weird, right? And then we got the Euro Pound. There's going to be a bit of a pull between the Euro and the Pound here. But if you take a look at the overall movement on the Euro Pound, the Euro is actually gaining against the Pound right now. It's just that Euro Pound is probably not a great trade to focus on today. So Euro Yen, we could potentially bounce off 135. Now let me bring up Euro New Zealand. We know New Zealand this morning was strong, but you see the turnaround in the past 4 or 5 hours. We could see a very sharp turnaround in Euro New Zealand. Okay. In terms of FIB, we actually are currently using this FIB here. Right now, 50%, 61.8%, around 1.6550. But beyond that, we are potentially looking at further move towards 1.6750 on the Euro New Zealand. Okay. So next comes the Euro USD. Now, if you take a look at this one, you might think, oh yeah, you know what, Euro USD is dropping down as well. But let me zoom out a little bit. And you can actually clearly see the Euro USD, 1 hour probably not as clear, but let me just switch to the 4 hourly time frame. The 4 hourly time frame, this is actually picking up a lot stronger, right? We are above 1.05, okay, which is there. That was where the previous support area, and then it broke through, and then we managed to come back up. If you take a look at where we are right now on the Euro USD, this one has actually moved up a lot, significantly, away from 1.05. Now, when we talk about the market, we make a comparison with the Euro USD and the Pound USD. The focus for the month of May was actually at 1.05 and 1.25 on the Pound USD. I brought this up a lot during the Monday outlook, but we can see where the Euro USD is. This one has progressed, obviously it's back down a little bit, but it managed to push away around 240, 250 pips, right? Closer to 1.0750. Now let me bring up Pound USD. This is actually still kind of stuck at 1.25, so we're not looking at the gains happening in Pound USD. Therefore, if you take a look at the Euro USD, sure, Euro might weaken against the US dollar tonight, but if you take a look at all the other crosses, the Euro is actually gaining. The Euro AUD is up, Euro CAD is up, Euro Yen could potentially bounce up. Therefore, be very cautious, be very careful with Euro USD because if we take a look at the Aussie USD, it might fall off. It might just slide off tonight. We might take a look at the Pound USD. It might continue to slide off. Euro USD might slide off, but it's not going to be as extreme, because if we draw 1.06 here, which is a psychological price level, that's where your support level is going to be. Now, 1.6, 1.05, right? 100 pips, 100 pips. Okay, let me bring back the pivot and take a look at where the pivot for support 3 for the Euro USD is actually located at 1.06. So the scenario for Euro USD is that you need to be careful. It's not going to move like the Aussie USD. It's not going to move like the Pound USD. If you take a look at this swift change in momentum, this is already below 20. The Pound USD is still tracking down. Okay, so the Euro USD, it's actually ahead of Aussie USD and Pound USD. So what I'm saying is this: if you see the market drop off today, if you see the US dollar strengthen, if you see the Nasdaq drops down, Dow dropping down, I believe, I take a look at it pre-market, I believe it should be down. In 2 minutes we do have data coming out as well, but just be very careful with the Euro USD. There's actually a lot of support going on here. So the potential scenario for the Euro USD is that it's better for this one to just go down a little bit more and then pick it up around 1.06 and then wait for a change in momentum on the hourly time frame. Stochastics, I'm using 1455, by the way, if you want to know. So I'm using 1455 for the stochastics if you want to match it up, or if you're curious. But I'm actually, disclaimer wise, I'm actually waiting for this one to potentially bounce off 1.06. In terms of stop losses, we are going to be looking at 1.0540 actually, but in terms of target, we are actually looking at a potential return towards 1.0750 on the Euro USD. Risk reward ratio, this is actually going to be great because it's 1 to 2 risk reward ratio, risking around 65, 60 pips. Potential gain is around 144 on the Euro USD. So let me just remind you, on the Euro USD, this is slightly different from, let's say, the Pound USD or the Aussie USD. Okay, we'll take a look at the Aussie USD and the Pound USD in a minute, but just a reminder, the Euro USD is actually different. Okay, now let me just go through the chat for a bit. I'm not confident about yen fundamentally, but about in the last 2 weeks, Japanese yen has strengthened. Please advise, is anything changing fundamentally? Yeah, to a certain degree, yes. The Japanese government has actually asked the Bank of Japan to actually create an inflation plan. So, could that be fundamentally helpful for the yen. Yeah, potentially, but not as big. Other than that, we're looking more on the safe havens asset scenario. That's where the yen has strengthened. We have data just right now. We have the durable goods order month on month is actually lower than what the market's expecting. But again, the focus is not going to be that. The focus is actually going to be the FOMC meeting minutes. That's going to be out in 5 hours, well, 5.5 hours. That's the FOMC meeting minutes. Now, I think the FOMC meeting minutes, we're not looking for any upsides. We are not looking for any surprises. I think the FOMC is going to remain hawkish. Again, please be careful because the FOMC meeting minutes is just minutes of the last meeting, which happened 2 weeks ago. Okay, so all these new numbers that has just been published, a new home sales number dropping down and stuff like that, that's not going to be in the minutes. I think the minutes are still going to be hawkish. And then, you know what? That's where I say there's a potential for an intraday scenario where the US dollar is going to strengthen. That's likely going to be because of the minutes, okay? But that aside, let me just continue on. I want to show you Pound USD next, okay? So we got Pound USD. This was from last week's example, by the way. I think it hit 50% and slid down. But other than that, let me just clear this off so I can show you what's going on with this one. One focus on this one is actually 1.25. Okay, we are below 1.25. We have a bit more room to go to the downside, but again, I want to highlight one thing. If we take a look at support here for the Pound USD, between 1.25 and 1.2450, market is likely going to be slow. Okay, if you take a look at this one, that's where the resistance and support cluster is going to be. Highlight that further. This is going to be an area where it's a little bit hard to traverse for Pound USD. So my view is this. I think we are back at 1.25. We might see, market push towards 1.2450, but I'm not planning to go for a short until there's a break below 1.2450. If this break doesn't happen, then I'm actually going to stay clear from Pound USD and actually trade the sterling yen. But Pound USD, we are at a psychological price level. It's very close to 1.25. We take a look at the whole picture here, from the 17th of May to up till today. We are looking at a range where price, kind of got trapped and moved sideways. So this is actually going to be a hard push for the Pound USD. It's not like, hourly is below 1.25, because if I zoom out, we're not looking at support below 1.25. We're actually going to be looking at a potential break below 1.2450 before we consider this to be, further continuation to the downside for the Pound USD. So be a little bit more careful with Pound USD. Can you go long Pound USD instead? Or, this is below the Ichimoku cloud. Obviously, you can see what's going on here. Price actually trades within the Ichimoku cloud. We just break through below the Ichimoku cloud, so there's a lot of risk if you're planning to go long. However, the Ichimoku cloud is actually very, very thin up until tomorrow, so it could potentially push higher, but it's going to be very limited because we do have a limit at 1.26 on the Pound USD. Okay, so I don't like Pound USD unless you're planning for an intraday trade on Pound USD. Then you can kind of potentially say, maybe I'm looking at around 1.2550 as a potential target intraday and blah blah blah. Sure. Let's bring back the pivot points. Okay, we are closer to support. So if you're planning to go long on Pound USD, make sure your stop losses are below support 1. Ideally, I want to have my stop loss below 1.2450. In terms of target, can't really aim for much. You can aim for 1.2550. That's pretty much it. Is it going to give you a good risk reward ratio and stuff like that? It is, but the range is just smaller. you're looking at about maybe 40 to 50 pips in terms of stop loss. In terms of profit target, you are going to be looking at around 60 to 65 pips, but that's an option. You can play on this the strength of the support that we have right now, between 1.25 and 1.2450, where I highlighted as blue. But make sure your stop losses are below 1.2450 if you're planning to go long on this one. The other scenario is this: you might be in a short position. If you are in a short position, if you want to go short right now, let me just give you the risk to reward ratio. It's not that great because we are looking at support around 1.2450. Risk to reward ratio is actually about 1 to 1. So if you have a short position, you can start adjusting your stop losses and whatnot. Just be careful of support to come in at around 1.2450. The area right now between 1.25 and 1.2450, that's likely going to be a lot of choppiness for that. Okay, so I prefer to be looking at Euro USD than looking at Pound USD. I don't think Pound USD is in a very attractive situation right now. It is very choppy. It's going to be trapped within that 50 pips range between 1.2450 to 1.25. So be very careful with Pound USD. The Euro USD, you might get that push from the FOMC, but I think you should, consider setting things up. The US market is already open, by the way, and let me just check on the Nasdaq and the US 30s if it. I was expecting negative, and we are looking at a potentially negative situation on Nasdaq and US 30. So this is all gonna pile up around 11,570. Right. Fib wise, I think we have a new extension. If we line up the extension 127.2, that's going to be at this support level exactly. That is at 11,489, so closer to 11,500. That's going to be your support for Nasdaq 100. If you're planning to trade the Nasdaq 100, just be very careful, be mindful of that. I think the overall tone is that it's still going to push lower. We might see price spike to 11,500 and then bounce back up. Just be very careful because that's a 127.2 extension from this one here. But that also lines up with 20th of May low. So be very careful if you are trading the index. Okay, but the overall tone is this. If you take a look at the Nasdaq, the US 30, if you take a look at the stochastics, it's all pointing down, and there's a lot of room to go. Now, if I line this up with the Pound USD, similar situation with the Pound USD, the Aussie USD, more or less in the, very similar looking stochastics there. The Euro USD is different, right? It's different because we're already down there. The Aussie USD, the slow is trying to catch up with the fast stochastics here. Aussie USD, Pound USD, indices, Nasdaq, and the US 30, very similar situation here. Okay, so I'm kind of expecting potential dollar strength to return today. The dollar yen, this is starting to pick up a little bit, but let me just zoom out and bring up the Ishimoku cloud. This is still below the Ishimoku cloud, however, so be mindful of this one. But if you take a look at the range, it's actually really limited. We actually have support coming in at 126.40. Let's draw 125.50. I think we do have support at 125.50. So, sorry, 126.50. Pay close attention to 126.50. If there's no hourly close below 126.50, then we're good for the dollar yen. Dollar is likely going to pick up, especially on the dollar yen. But if you take a look at the scenario with the Aussie yen, sterling yen, the euro yen, it's likely going to be weaker. Then we need to consider the dollar yen is actually going to get, it's actually going to go range bound. It's actually going to go sideways with 126.50 as a potential pivot going forward. So be mindful with the dollar yen. Take a look at this one here. Range wise, I think we are still at pivot around 127, I believe. So we're pivoting at 127. We do have a little bit of support at 126.50, but the support one is actually located at 126. But yeah, range is going to be, it's not going to be as big as the Aussie Yen, the Euro Yen, or the Sterling Yen, but the Dollar Yen right now is actually not it's not really in a good place. Because if you go short Dollar Yen, you are at risk with the FOMC tonight being hawkish. If that's the case, then the Dollar Yen could push higher. So I would actually prefer to stay clear from the Dollar Yen. I don't think tonight is a great night for you to be, setting up your swing position. If you want to set up your swing position, wait until the FOMC meeting minutes are out, digest the information, and then decide what to do with it. So the ideal timing, if you want to have a swing position, is actually tomorrow morning, Asian session. Okay, but right now, good for intraday trades, not great for swing trades. Okay, so I'm gonna get rid of the pivot points, bring back the Ichimoku cloud. We got support coming in around 127.25 on this one here. If it does close above 127.25, then that's great, because it's going to transition above the Ichimoku cloud, and that's where you could plan to go long on the Dollar Yen, because if price does break above 127.25, then this one, the stochastics, could actually turn around and continue to move up. So if you're planning to have a position on the Dollar Yen, I much prefer to be looking for a potential long than going short. If you do want to go short, you can, right? Just make sure your stop losses are beyond 127.25, maybe around 127.30. In terms of target, you're looking at 126.50. Okay, that's going to give you about 1-to-1 risk reward ratio, 40 pip down, 40 pip up. But I much prefer a scenario where this one transition above 127.50. 127.25, maybe around above 127.30, and then your stop losses could be here. In terms of target, it could be where the barriers are around 128. That's going to give you a much better risk reward ratio, because this one you can adjust it. You can adjust the target to go for that high over there. That's going to scale up. It's just going to allow you more room to potentially scale up. Now, the other reason why I'm actually waiting for 127.25 is this, because if you draw a trend line, breaking above that trend line will actually push price above 127.25. So just keep that in mind with the Dollar Yen here. And that's why I much prefer to wait for price to transition above 127.25 and then go long on that break as well. Okay. Let's bring back the pivot points. Okay. Yeah, in terms of target, that's going to be your target for, you're not going to be looking at the resistance 2, because when this happen, it's not going to happen now. It's going to happen in a few hours time. When that few hours time happen, we have a new daily cycle, because the whole, I think we only have a few hours left on this pivot here. But let me just double check. Yeah, we're actually starting a new cycle very, very soon. Yeah, so I much prefer to wait for price to break above 125 or 127.25 before planning a trade on the Dollar Yen. Just be mindful of this one. Okay, let's go through the questions. Can we trade at the breakout and rejection of pivot points at the hourly time frame? Yes, you can. Just make sure that you draw the pivot points correctly, because pivot points will depend on the starting time. In currency market or in futures market, we use GMT 00, right? In the stock market, for example, if you're watching the Nasdaq, the US 30, the indices, you want to follow the US Open instead of the UK Open. So just be very mindful of when you start your pivot points. Now, pivot points in MT4, if you guys are using MT4, I believe it's a custom indicator. There's a lot of various version out there for pivot points. So just be careful in terms of pivot calculation. I might bring back. I might show you guys the calculation method for pivot points. It's not that hard, but I just need to find it. I don't have it at the top of my head. Okay, COVID-19 is over. I don't think COVID-19 is over, but anyway, many people are no longer working at home, and unemployment is decreasing. Will the market lose volatility? If yes, how much volatility is lost in the market? No. We don't count volatility in that context, because people that trade at home, right, small retail traders, their volume to affect volatility in the market is nigh impossible. Okay, so it doesn't work that way. Good evening. I want to know if it's possible for you to share the fib material last week to the group. Yeah, I can do that. Can I ask for strategy advice for intraday trading at crypto? Let's take a look at crypto, because I do want to caution you on crypto here. There's a lot of stuff right on crypto, but I'm gonna base it on Bitcoin. I just look at Bitcoin as kind of my guideline. Let me zoom out a little bit. We are actually struggling at 30,000 for Bitcoin. It's been stuck there since 12th of May. It's now 25th of May. I guess it's about 2 weeks of trading, right? Take a look at the momentum here. It's picked up halfway, but price is not really going anywhere. So I need to caution you on this one here. Is it great to trade crypto for intraday? I don't do that. But can you use the hourly time frame and stuff like that? You can, and it's just that this range is just going to be huge, right? So consider that before you trade crypto intraday. Because right now, do I prefer to go long or short? I much prefer to go short. There's actually this trend line here. I believe that's just been broken. I don't think it's broken yet, but you can keep that there. So that trend line is actually from 19th of May low. There's no close. We do have a spike beyond it. This doesn't count as a close. So if you're wondering what counts as a breakout, this doesn't count because the body doesn't close below it. So if it does close below it, then yeah. Right now, I much prefer to go short Bitcoin than going long. But let me just put this into perspective. You can see what it's doing right now. It's actually creating a pennant. So let me zoom out. You can see that it's actually forming a symmetrical triangle. I can extend this back here if you want me to, and then this one here, it's going to still create a limit for the market. This is much realistic. It's just that we have a spike out there. Okay, so notice this formation here. We are trading within a range that's actually getting smaller and smaller. So if you go short on this one, just think about it. Do you expect a new low on this one? I expect price to actually trade like this. 30,000 as pivot, it's likely going to trade like that. Okay, potentially within range, but 30,000 as pivot. So if you're planning to trade crypto, use Bitcoin as a guidance. I'm not gonna even talk about all the funny altcoins that was in the news lately. It's just ridiculous. But stable coins, I would prefer Bitcoin as my go-to reference. Whatever crypto you're trading, there's a lot of cryptos out there, but if you are planning to trade crypto, just focus on Bitcoin as kind of your guidance on where the crypto market's likely going to go, because by volume, it's still the largest. Yeah, I mean, if you guys want that, do type it in the chat. We can talk about pivot points next week. Again, this is open, right? We could be looking at the market this week. We could be looking at something educational next week. Just let me know. Leave it in the comments, even if you're not watching this live. Just leave it in the comments that you say, hey, I prefer, I want to see this kind of material. Then we can work it out. Pivot point setting on this one, I believe it's just a standard one based on GMT. Yeah, this is actually based on UTC. So again, I think we need to talk deeper into the pivot points, but this is kind of a standard. This is using GMT 00 as the start of the day. Okay, XTI, XTI is US oil. Actually, let me just bring this one up here. Okay, XTI, you need to be careful with XTI, and especially intraday. It is likely going to look very choppy. In terms of range, we're kind of limited at around 100 and 111.50 actually, not even 112. So if you are trading XCI, just be mindful of 111.50. Okay, that's your intraday gauge, I believe. If it does break above 111.50, then it could potentially track higher towards 113. But at this point in time, as long as 111.50 caps the market, it's very hard for this one to break above that. In terms of support, we're looking at around 110.25 now. Again, this is not ideal for scalpers. Oil is not meant to be traded like that, but if you do want to trade this intraday, just be mindful of the overall condition that's affecting oil and gas prices. That's still in play here. The situation in Kiev is not done yet. It's just not in the main news, I guess. But XCI USD 111.50, that's going to be your focus. In terms of range, this is where the range is going to be, between 108.50 to 111.50. That's where the XCI is likely going to trade, and this is likely going to be stuck for a good while. Okay, gold. Let's talk about gold, because I do want to talk about gold. Now, gold, if you take a look at the hourly time frame in terms of stochastics, now obviously we're talking about different assets here, but let me just bring back the daily one. So you can take a look at the daily here. On the outlook on Monday, I mentioned in terms of barriers, it's 1850. If we trade above 1850, then we are looking at 1880 and then 1900. In terms of price fluctuation right now, we do see a dip today on gold, but the overall daily momentum still points to the upside. In terms of the hourly momentum, it's actually at the Ichimoku cloud, so we potentially might be able to look at a potential support here being built up around 1850. So as long as price doesn't close back down below 1850, then we are good. If price bounces off 1850, like so, even if it trades within the Ichimoku cloud, doesn't matter. But one thing to point out is this: we definitely want to wait until the stochastics crosses above 20. Then I much prefer to actually hold long on gold rather than going short, because let me give you a scenario where we go short right now. If we go short gold, your stop loss is going to be pretty high up. Okay, in terms of support target, you could be looking at about 1840, 1835, and that's pretty much it. Risk reward ratio is probably going to be about 1-to-1 max, right? You're probably looking at risking 15, 16 bucks. Sorry, $15 to $18 for a potential target of 15 to 16. It's going to give you about 1-to-1 risk reward ratio. However, if you wait for a potential bounce, you are likely going to minimize your risk to about below 1850, that's only about $5. And then in terms of target, even if you go for 1870, 1860, it's gonna give you a much better risk reward ratio than going short. Again, the next key support level for gold is actually at 1880. So yeah, I much prefer to see a scenario where it actually bounces off 1850, and definitely want to keep an eye out on 1850. If there's no no daily close below 1850, then we're good. But on this note, we are actually tracking the movement on the daily time frame. So intraday traders, what you guys could do is that if this one remains range bound like so, then trade within the range. In terms of range, I can give it to you right now. That's between 1846 to 1846 to 1869. I'm gonna change this to black, so you know the difference. So range is actually between 1846 to 1869. That's going to be around $22 in terms of range, and price could just bounce within this, hovering around 1850. So keep an eye out on gold and be very, very careful with gold. I still think there's room to go to the upside for gold. It's just that be mindful of the FOMC meeting minutes, because it could create a spike in terms of the intraday movement for whatever currencies you're looking at. Okay. All right, we got gold. XNG USD, big fall will happen. I don't know. I haven't checked. I don't think so yet. Still tracking higher. Look, you got your gas limit from Russia in terms of Europe. Plus, Russian rubles is actually gaining because Russia is demanding that any gas imports, any gas export from Russia is to be paid in rubles instead of the euro. So, is it time to go down yet, or is it time to fall off yet? I don't think the natural gas is going off anytime soon. Is there any potential for Euro USD to move up above the daily cloud? Let me just look for a second here. Very, very hard to do. Because in order for it to move up above the daily cloud, it needs to go up by what, another 200-300 pips. So yeah, no rush on this one. Right. Albert, as I mentioned earlier when we started, there's a reason why the US dollar weakens this week, but let me just remind that to those that jump in late. The reason you see that dollar weakness is that the housing data yesterday was bad. Month to month, new home sales dropped by 16.6%. Manufacturing data is actually borderlining 50. Let me just read that out. Let me just check this. Okay, services PMI, the consensus was for 55. The number that came out was 53.5. Composite, which is a combination, is 55.5. It printed out at 53.8. The manufacturing PMI was 57.5, down from 59.2. So I don't think the US have it bad. In terms of PMIs, I think the UK had it even worse. Let me look at the UK numbers. I believe it was closer to about 51. Manufacturing down consensus was 55.2. It printed out 54.6. Services PMI, last month it was 58.9. It dropped down to 51.8. So borderlining 50. The composite is actually at 51. The consensus was for 58. It dropped down too far. It's borderlining 50 for the UK numbers. So yeah, the US numbers, we saw a slight pullback. Now, the reason why the US dollar was weak. This is because people look at this and there's a lot of talk about recession going on, the economy slowing down, inflation picking up, peaking, not picking, right? So the inflation has peaked. The FOMC might not have to hike interest rates, stuff like that, but you'll probably pick it up from the FOMC meeting minutes that they're likely going to be planning, several more hikes at 50 basis points for this year from the FOMC. That's going to turn the market around, could potentially turn the market around. But if you're wondering where that weakness is in terms of US dollar, it was gaining and all of a sudden it was weak because all the other data that comes out are a bit weaker. Okay, the housing fall back. Housing numbers fall down. That's relatable. It's just common sense. If interest rates goes up and interest rates are likely to go up, then people are likely to be more reluctant to purchase new properties. Don't want to take new loans because the interest rate is just going to go up. So it's just logical. Okay, but what the media coverage is, or what the market is talking about right now, is that can the FOMC balance this out, right? Can they hike interest rate without creating a recession? And that's where the talk of recession is happening. Now, if you take a look at the numbers, the data and stuff like that, if you take a look at the unemployment rate and the GDP growth, I don't think a hard recession is going to happen. The PMI number might drop below 50, but that doesn't mean a recession, right? It basically means that the economy is contracting, but it doesn't necessarily mean a recession is happening. So, but I think the market is talking about how the FOMC is going to handle it if they are still going to hike rates significantly throughout the year. Can they handle it if the economy goes into recession? What are they going to do if the economy goes into recession? Are they still going to hike rates, or are they going to put a stop on the interest rate hikes? But then if they don't hike rates, inflation is going to go up, right? So that's where the concern is right now with the market. Can you reduce inflation by hiking interest rate but not create a recession in the economy? Does that make sense? Okay, hopefully it makes sense. Would you please give your analysis on sterling Swiss? Okay, we can do one sterling Swiss and then we need to wrap it up for the day. Sterling Swiss daily still points to the downside. Now, if we take a look at the whole safe haven situation for this one, the Swiss, the yen, the dollar is going to gain, right? It's not, when we talk about safe haven, it's not the yen that's just going to gain, the dollar is going to gain, the yen is going to gain, gold is going to gain, Swiss is going to gain. Okay, so it's not really black and white when we talk about safe haven assets, but we do have that scenario. Okay, for sterling Swiss today, we can pull the pivot points up again if we want. If you want to have your pivots here for the sterling Swiss. I haven't been monitoring sterling Swiss for a while, but one key thing to watch out for is at 1.2. This is a strong psychological support level for sterling Swiss. Okay, that's going to create a floor on the sterling Swiss here. Daily pivot. It's overlapping at around 1.1950. I think it's too far down there. I don't think we need to be that concerned about 1.1950 or the pivot levels, but I want you to pay closer attention to 1.2. Now, if I bring out the Ishimoku cloud, this is trading below the Ishimoku cloud. However, we cannot ignore 1.2 because 1.2 is a key psychological price level for the sterling Swiss. Now, this level hasn't been reached since last year? So it's a yearly support. 1.2 is a key level. Okay, if we have a daily close below 1.2, then we can talk about it. But intraday wise, because this is trading closer to 1.2, be mindful of that 1.2 level because price could do this. It could actually trade below 1.2 and then go back up and then slowly pick up. Okay, the overall thing is that the momentum here, you need to watch out for that momentum change. I don't think there's any divergences or anything like that. Not that I noticed on the hourly time frame. I don't pick that up on the daily time frame as well, but let me just double check. Yeah, again, there's no divergence. This could be overextended. We're still going by this fib here. No, actually this fib. Okay. Again, 1.2 is at 127.2%. So I need you to pay closer attention to 1.2. Don't rush in. Don't, I much prefer to wait for price to just go to 1.2, bounce off 1.2, or any indication that the hourly momentum has exhausted itself. So I would prefer for the momentum to turn around and see if price is still above 1.2, because if price is still above 1.2, then I much prefer to go for a long position, having a stop loss at this swing low here. Or you can drop it down to 1.1975 if you want to. In terms of target, then you can play around with the target. You can go for this high here. That's going to give you a 1-to-1 to risk reward ratio. Or you can go back up to 1.2 on 50. Okay, but sterling Swiss, just be mindful of that 1.2, because on the daily time frame, that's where the 127.2 is. On a psychological scale, that's where that's a strong psychological support level. Technically, this was January 2021 resistance level. So it could be that the market is testing this as potential support. If it bounces away from 1.2, that'll be great. If you want to jump in intraday wise, then jumping closer to 1.2, then you can have your stop loss on a small scale. Obviously, it's not going to be a small scale, because in terms of sterling Swiss, the volatility is going to be high. So if you're not familiar with this, don't trade sterling Swiss. Okay. Okay, guys. Pivot points level, what do I use for pivot points on this one? I believe it's just the standard pivot points. Actually, let me just check if I'm actually not sure which pivot point. I think it's just a standard pivot point for this one here. Try out a few pivot points and see if they have the same level. If they do, then they're exactly the same, so it doesn't matter anyway. Okay. Update on New Zealand USD. Let's do a quick update on New Zealand USD. Let me just remind you, in terms of New Zealand USD, they could be super hawkish, whatever. It's irrelevant. Their economy is just so small. To me, I don't think it matters a lot. In terms of fluctuations that you see in the market, in terms of range, they're pretty limited. I would much prefer that you focus on there is a resistance at 65 cents on New Zealand USD. If the daily failed to break above that 65 cents, then this is really not going anywhere. In terms of corrections in the market, we can use this fib here. That's where the 78.6 is. Okay, so yeah, RBNZ could be hiking rates and stuff like that, but technically it's kind of irrelevant, because you see that rejection happen today on the move up. It's very sharp turnaround at 65 cents. So I would condition yourself to think that 65 cents is kind of the key level to watch out for. In terms of what to do, I would prefer to either go for 64.25 break on the hourly time frame, or 64 cents break. So the range between 64 and 64.25, ideally you don't trade it when price gets there. Let me zoom in. You can see why that was the previous resistance. It's not being tested as support, whatever not. Right now, if you are planning to go short, it's a little bit too late. If you're planning to go long, it's not time yet. Just pay closer attention to 64 cents and 64.25. If price breaks below 64, if we have a daily close below 64, then I much prefer to go short, having a stop loss above 65. Okay, but if 64 is strong as a support level, then you could wait for the stochastics to turn around. We have enough momentum, then you could go long intraday targeting 65. Okay, so a couple of intraday scenario could be like this. Okay, it could be taking 65 as a target. If you are planning for a longer term scenario, no. Well, yeah, a longer term scenario would be a close above 65, but in any case, it could be that. If you are looking at a short right now, it's not ideal because we are closer to support right now, and then your stop losses has to be up there. You could be risking 73 pips for what, a gain of 40 max, so be very careful. I don't like this one because you're risking double than your potential gain on a short position for New Zealand USD. So if you're not in New Zealand USD, I don't think it's time for you to chase this trade, but if you're short New Zealand USD, be on the lookout. We might potentially see support coming in at 64, 64.25. Okay, thank you guys. So good luck with the trades. Don't forget that the FOMC meeting minutes is coming up. I believe in the next in 5 hours time. So be on the lookout for that one. Again, it could create a little bit of a turnaround in the market. So yeah, if you want to rewatch today's session, then do so. Going forward, if you want to have more educational contents, you want me to talk about pivot points, for example, next week, do leave a comment. Then the team at Octa FX can take a look at that and see what we can do. Okay, thank you all. Have a great day ahead, and I'll see you soon.